Welcome back to another video, guys. I've got some concepts to share with you. I've been watching a lot of the 2026 ICT videos on like 1.75, 1.5 speed, and I've been getting through it. And what I want to talk to you guys about is how to use the Octants fib. Like using the Octants fib, I found out especially with our quarterly theory precision at highs and lows for reversals, the Octants is a great way to read price action. It's incredibly precise, and what it's for is fractal time frame. So we know that the 1 minute, the 15 minute, 5 minute, 1 minute, but it also goes 1 minute, 15 second, 5 second in the opposite direction, right? Because time is fractal. If we're getting lower in the seconds, we're still dividing by three. And so this is something that we need to get out of the seconds. So this is something that I was backtesting, looking at different price action through the weeks of this month, and I was really grading it in terms of these Octants levels. Because if we're looking at a PO3, we have our 30-minute open, we sweep major major buy side liquidity for the week, and we're going to get into the weekly analysis too after this. We go down to the 30-second chart. The 30-second isn't really fractal something. It's just a better second chart. So if you're really like looking at the 15-second chart, using the PO3 Octant levels, you can see like where price is going to. Oftentimes that is a great displacement candle for a high being at those like accumulation highs, or if we get a sweep, it would be at that sweep. And it's at these levels, right? We form our order blocks there, we form our IFEGs that we use on the opposing side, like an IFEG there that also got tapped into. I don't have to mark it out, but you understand that if our 15-second is like that. And because this all stems from the idea that PO3 is a time-based candle, and we have a lot of volatility. So what does that mean? We have more movement on the seconds time frame. And so that means we have more fractal price action on the seconds time frame. Like this is 10 minutes of market open, and we're already right here. First 10 minutes. If we look on the 30-second chart, you can see it clearly gives us more opportunity. You can't think of it as it's moving. It is moving faster, but it's also fractal price action. Of course, we have to move to the higher time frames and see on the 1 minute, and we have to move down, and so you do have to be quick. But who said this was easy? Like 5 second chart, we're getting a perfect market maker model. And what ICT said is, if you want to like really start getting a hang of this, then you got to pay to play. You got to put some risk on the table. If you took this reentry right here, broke structure to the upside, and we're off the first presented for value gap of the 5 second chart. You take this to just 1 to 1, and you're already paying back what you would put on for probably a mini right here. I'm only 17 points. That'd be like $370, $360 risk. And look what your target is just over time. And you're getting in on the 5 second. It does move faster, but we can still use our concepts, right? Our first presented gap was still right here. It didn't come to CE. Market structure shifted with another internal gap on the 5 second, on the 15 second, right? So this can allow you more RR. This can definitely allow you more RR because you're getting in on fractal time frames. And if you're already in direction, like say you didn't, we weren't taking a long because we were obviously short. We had a DC coming in, and then this right here is perfect entry going in short. Go down to the 15 second. And this, what I've noticed also when I backtested, this is a law. You have to use this when you're thinking about using the lower time frame octants. Is when we're low resistance, then these are going to be abundantly clear where the best opportunities for positions are, which are at the levels, like at quite literally at the levels. It's where we create the order blocks that are falling over, where we're retesting, where we're rejecting from when we have like major pullbacks on the higher time frames. So this is really like what you're looking for to like accumulation at these levels. It's something that you got to look for when taking the entry. And ICT, this dude is ridiculous. Like he literally was on the 1 second chart and got in on this candle after this displacement candle off the fucking 1 second market structure shift where I was in. And then he added until like right here. Like ridiculous shit on the 1 second chart. But it's just watching it and you're seeing how price action is moving on the smallest time frame, so you understand where the 1 minute candle is going to go. And even a 1 minute candle, like if we just put on the RR for a 1 minute candle, it's already 1 to 1.5, and the wick was at probably close to one, almost 1 to 2. On two 1 minute candles, you are up 3.5 R. Like it's just playing with volatility on the lower time frame. And so, if you want to risk higher position and practice with that, I mean, you will be rewarded if you're on the right side of the market, and you will be handsomely rewarded if you're really on the right side of the market. And so, if you guys know, like Market Maker gets in on crazy positions with 7 minis, and he's carrying through the trades that I'm trying to take, distribution across 3 cycles or more for an entire daily range. That shit is an annual salary, bro. No doubt, it is insane what you can do, and it's all about precise entries. And to be more precise, you have to use the lower time frame. And so to navigate that, using the octants is like using quadrants, but we're doubling up. Okay, I'm just copying pasting this to eyeball it, and just so you can like kind of see what I'm talking about. These are the this is the 5 second and the 16th, whatever it's. I don't even know the settings that would be on this, but look at that. I mean, right where accumulation is happening, it's holding it in place. Literally, the order blocks are within those gaps on the 16th. Like, it's crazy. And look, if you weren't expecting it to go to CE, then it's right there on the lower portion, and you got a market structure shift above that. Bro, this shit is fucking ridiculous. I like didn't know that this would be quite literally the most cracked out theory. And ICT said he has like 60 something. He's like only sharing like 30% of what he knows, which is crazy to think about because he's been in the market for something like 30 something years, like 35 years trading, which is before it was digital. And so just take a look at that theory. I'll just say it's a theory just because I want to, I want those entries to myself, bro. You think I want to be competing with y'all when you figure this shit out? So anyway, we're gonna go to the weekly calendar or weekly chart on the 90 minute. And I'm telling you guys, I don't want to keep saying it, but for the new people that coming in, use the 90 minute. This 1 hour, it was not as refined as it needs to be. Like, we'll take off the chart and we'll get into those in a second, but the 4 hour just takes too long for one. The 1 minute or the 1 hour is just too much. So the 90 minute is a perfect in between. Another use of the 90 minute is to find where we have major sweeps and it aligns with structure. So I could use this SMT order block and it aligns just with where the not just the bodies but where the wicks are going to inference to. Like, this is where you would find liquidity pools, or if you were to use like gamma levels, this is really what you're referring to. You're referring to the structure liquidity on a time frame that's better than the 1 hour, but really not more than a 4 hour because it takes too long. So this and aligns with our internal PO3 that we use to trade New York session. And ICT says if you're not trading New York session, New York time, then you're doing it wrong because that's what the market is programmed on based on time. And we're trading with price at the right time. So that's very important. Another tip for using the 90 minute candle is for using highs and lows. You can see I have this order block marked out that we used on the SMT. That was was it our first of the week? It was first high time frame SMT of the week, and we really didn't get another, not even at this reversal. It was mostly internal from the 90 minute. So this 90 minute SMT order block CE, we're using CE because it's a kind of make or break basically for how candle structure is going to move on the high time frame. And we basically use CE for everything we use, whether it's our octants or whether it's quadrants or it's the 16th or 32s with the 1 second, which is it's real. It's real. So what I'm looking at here is I'm looking at the order block. Sorry, not the order block. I'm looking at the BPR between where we traded into the CE of that and where we trade into on the opposing side on the bearish candle. And just looking at those fractally, these are key levels basically. This is how you mark out key levels on the lower time frame. Like, looking at these 90 minute levels is mainly for using the bodies and using liquidity sweeps, using major points of reversal to where like high time frame POIs are for structure, for 90-minute structured alignment. So using that to read the week, because I love using the 90-minute for the week, it just helps out so much, cutting out nonsense. And today I want to mention something else, AMDX. If we do have it for the week, it is more likely that each day will be AMDX. This entire week we were always AMDX, which is kind of crazy. So just paying attention to that is important because we are looking for when they are aligned, so it is convenient when it does that. But it does it more often if you keep track of the data over a while. So we want to measure out even more key levels. And what I found is using OTE and gap alignment, which is for a retrace to continue higher, or if we're looking for it to break down, we want to come back to OTE. We don't want to go back to OTE. OTE is so important. I mean, it's so simple, but yet so important. And so what I really look for, I can't believe this is not, there we go. What I look for in any OTE trade, whether it comes to 0.705, where it comes further than that, whether it goes less than that, or barely gets to 0.62, there's our OTE. But what I'm looking for in any OTE reversal is for our 1 hour, our 90-minute, our 15-minute, and our 1-minute gap CEs to all be like key levels for reversing. So that's a 90-minute, or sorry, that's a 1 hour one. Our 90-minute one is going to be the same as the 1 hour one. Okay, so we'll just leave those both on there. Then our 15-minute lowest time frame for value gap is from here to there. Right here, the one that we got swept on liquidity, which was actually our sweep, that's what we call our liquidity pool. That is our key level. That's our gamma level. That's whatever you're gonna call it. That's where we're basically reversing off of. Then we have our lowest time frame, our lowest 15-minute gap right here, using that CE. And then our 5-minute. We didn't actually tap into the one on the 1 minute, but you can see the 5-minute is what we were trading on based on market structure. And we had our market structure shift right here. After that high was broken, this bearish high. We can count this too, but it was still broken. Tapped into our fair value gap and use that to create higher structure on the 15-minute, but on the 1 minute, you can see we have our indicator on 90-minute cycle and also a daily cycle at this low. This was running out. This is what our AMDX, which is early distribution. So distribution happens early during this cycle. And that starts at like 6:01. You can see right here, I have it marked out on ES, our distribution for the day, AMDX. So distribution would be at 6 a.m., which is when I have our next 90-minute cycle continuation higher at exactly 6 a.m. right here is where we swept. So that is just a couple of indicators really giving us some sauce. So that's really how I would use OTE and the gap alignment for everything internally retracing if we're not having like we had the DC at that low, but it was only because it was the opening right here. This DC was between the opening price, which was a gap internally right here. And so that DC alone moved us higher instead of the actual low of the week being swept. So things like that to read for analysis. So to end the video, I'm going to tell you once again the most important things that you want to be looking for whenever you're trading. And these are what I have indicators for. This is like literally the indicators that I have for in order. New weekly, new daily opening gap. You're using gap alignment. That's most important. Regular trading hours, it's basically time-based gaps that were given by the market makers, whatever, banks, whoever made the market, gave us these gaps in the market, and so we can grade them, we can use them for entries as well. With the Octants, with like anything. With OTE, not so much, but like when you're using it, use grading it at a fractal level, and you'll find out for great entries for continuation on lower time frames. So OTE and gap alignment, like we said, instead we can use SMTs, and that is really our defining pivot point. But using the gaps in OTE, we can find where it's going to be at and where we're likely to see it, just in terms of price action getting made. And that also gives us a reference to what time it's going to be, because if it's not time yet and it's all the way up here, we know it's not time yet because it's not an OTE. So things like that. Also, looking at our 90-minute fractal time frame alignment, just to narrow down price action. That's mainly what it's for, just getting a grasp on what the week's doing. And the weekly halving theory, where your reversal is going to be, we did not break lower after that new day opened. We just did not. So that was really our pivot point. It was right here. This was our first 3 days, or it could be the first 2 days. So looking at that will really give you an intuition to where our market maker model is like gonna be, because we had resting liquidity here, and we had high of the week here, which got swept, and even the one that got swept didn't get touched to. So like we're trading back into probably OTE of our range right here, trading into those lows. So somewhere here. Also, pushing pressure limits on the 5 second chart. If you want to get a read on the market, you gotta put money in. You gotta like really be in the trade. And if you do it on the 5 second chart, you can go 1 to 1 pretty easily, go break even, and take your risk off. And the reward is really much higher on the 5 second because of the volatility. Especially if you're already like in the direction, it's just dropping price action. Then you want to go on the second chart and just go break even if you can. So that is all for this video. That's really all I wanted to share. I thought that we were going to close in the new weekly opening gap. I didn't think we were going to push past this high. I thought we wanted to continue lower, but now because of this, how this moved really quickly after FOMC and the new month opening up, I think we're just going to wick down in this OTE somewhere around here. Not really, like somewhere like probably in here, and then move higher. I'd be surprised if we trade back lower into these lows. So what I'll be looking for is continuations for the next month, probably after the first week of price action. If the first week gets us like somewhere up here, we do have a weekly gap, and I've been looking at this. We tapped into it. I mean, we tapped into it. That was our weekly sweep, right? That I showed you at the beginning of the week, and then it just dropped after that, and we tapped into our monthly point of interest, which was the monthly gap. I have my annotations on NQ for this. Monthly gap and 3 month. Almost. I'm looking at this rebalance. I'm thinking this was my draw liquidity right here. It was literally how many points away from the low? 300 points, 350 points. But I think we do want to come a little bit lower. If we don't, and the new monthly candle actually like opens up really well, I mean, we are in the closer monthly fair value gap. This did close inside, but I mean, I think that we could still come a little bit lower. We did break structure to the upside on the daily time frame, so it could be possible that after this high's broken, we're definitely going to all-time highs, but that's premium buy side of July. That's kind of how I'm marking it, because July, because July was like from here to there, and I didn't want to count June because that draw liquidity was just kind of like for sure we'd already be heading there to break the highs. So that's all I'm looking for. Monthly, dang it, I moved it. Monthly CE. If we don't trade below this lower quadrant, which is where I have that, little low marked out that we're gonna come into. Like if we don't break in the monthly fair value gap and we don't come all the way down here, which is staying inside of this, kind of like pushing outside the lines on the wicks, but if we stay inside that and continue higher, then I'm gonna be bullish for a bit. So that's the analysis. I will see you guys in the next video.